What if one critical number could decide the fate of a $70 billion market and possibly shift the future of global payments as we know them? This week, the world of cryptocurrency is holding its breath, eyes locked on a single line, 230. That's the support level that could make or break Ripple's XRP. But why does it matter so much? And what's really at stake behind the jaw-dropping price swings, regulatory drama, and behind-the-scenes whale moves? Today, we dive into the heart of the XRP storm, a story of ambition, chaos, and opportunity unlike anything in finance. For most people, sending money across borders is a bureaucratic, expensive, and slow ordeal. But a small Silicon Valley company, Ripple, set out to change that back in 2012. Their vision? To turn cross-border payments from a multi-day headache into instant, seamless transactions. They built a network, RippleNet, and powered it with a new kind of digital asset, XRP. Not just another crypto coin, XRP was designed to act as a bridge asset, greasing the wheels for global transactions between any fiat currencies, at lightning speed and fractions of a cent in fees. At first, few outside the crypto bubble cared. Banks were skeptical, regulators wary. But by 2017, as cryptomania hit fever pitch, XRP shot into the spotlight. At its peak, it touched nearly $3.40 per token, briefly becoming the world's third largest digital asset. Then came the crash, and in late 2020, a storm that would threaten Ripple's very existence. The U.S. Securities and Exchange Commission slammed Ripple with a lawsuit, claiming XRP had been sold as an unregistered security. Overnight, American exchanges delisted XRP. The price tanked. For the next 4 years, Ripple fought the SEC in court, while its ambitions for global payments expansion hung in the balance. The future looked bleak. But fast forward to today, and the landscape is dramatically different. In May 2025, the SEC finally blinked, slashing Ripple's fine to $50 million, officially closing the lawsuit and recognizing XRP as not a security in the U.S. market. This legal clarity unleashed a new wave of optimism, both on Wall Street and among crypto's diehards. Major banks and fintechs began revisiting partnerships with Ripple, and institutional money trickled back in. XRP's price, battered and written off by many, began a slow but determined climb. Yet with volatility hardwired into its DNA, XRP's journey is anything but smooth. Last week, XRP exploded upward, smashing through technical ceilings and nearly touching $2.70, a level it hadn't seen in months. Bulls were ecstatic. Crypto Twitter was ablaze with speculation about new highs, while Google searches for XRP soared, hinting at a fresh wave of public interest. But the celebration was short-lived. At $2.45, XRP slammed into a wall. The price was violently rejected, plunging back to the critical support of $2.30. Why does this particular number matter so much? Veteran analyst Ali Martinez puts it bluntly. If XRP loses $2.30, we could see a fast move down to $200. That's been a key support all year. It's defended the price multiple times. In other words, $2.30 isn't just another chart squiggle. It's the line between stability and freefall. Adding to the tension, some of the market's biggest whales have begun quietly scaling back their exposure. WhaleWatch Perps, a service tracking large traders, reported, a top trader by P&L on Hyperliquid just reduced their long XRP position, now holding $54,960 at an average price of $2.32. To the uninitiated, this might sound minor, but in a market as sentiment-driven as crypto, actions from big players can send ripples, no pun intended, across the landscape. And what about retail investors and the wider community? Google Trends data shows searches for XRP spiked last week. According to well-followed analyst Zoom, breakouts occur when most are least interested in price action, or bored. In other words, mass boredom can precede turbulence, a curious psychological twist that makes this moment even more precarious. But zooming out, there's more at play than just technical charts and crowd psychology. Ripple is aggressively making moves on the international stage. In March, they clinched a license from Dubai's Financial Authority, opening doors to the Middle East and North Africa, a region eager for faster, cheaper remittances. Partnerships with Zandbank and Mamo in the UAE aim to cement Ripple's technology as the backbone of next-generation payment systems. Securing the DFSA license enables Ripple to better serve the demand for efficient cross-border payments, says Reese Merrick, Ripple's managing director for MENA. Even traditional banking voices are warming up. Zandbank's own team believes that with Ripple's tech, they could soon launch an AED-backed stablecoin, opening new possibilities for trade and remittances across the region. That's not just hype, it's a sign of real institutional buy-in. And just as important, the mood in Washington is shifting. The appointment of Paul Atkins as SEC chairman in 2025 could mark a turning point. Atkins is known for his crypto-friendly stance. A favorable regulatory environment could pave the way for greater mainstream adoption of XRP, notes Dr. Kirill Kretov of CoinPanel. Analysts at Standard Chartered are even more bullish, projecting XRP could hit 550 sound by year's end, if the regulatory tailwinds keep up. Meanwhile, the raw data is impossible to ignore. XRP trading volumes have spiked in South Korea, fueling a 7.9% jump in price, while whales have accumulated over 880 million tokens between April and May 2025. In the U.S., relief over cooling inflation, May's CPI came in below expectations at just 2.3%, has set the stage for a potential risk-on rally across all assets. Lower inflation boosts risk appetite, says Dr. Kretov. That's good news for assets like XRP. Tech is also driving momentum. XRP recently escaped a bearish head and shoulders pattern, hinting at further gains. The TD sequential, a respected technical indicator, has flashed a buy signal on the hourly chart, another glimmer of hope for battered holders. Still, for every bullish case, storm clouds lurk. The specter of a sharp drop below $2.30 is haunting traders worldwide. If that floor gives way, momentum could swing the other direction, and fast. A retreat to $200 wouldn't just be a number on a screen. It could shake confidence in Ripple's global ambitions. It would also rattle institutions cautiously dipping their toes back into crypto, threatening to stall the momentum Ripple has fought so hard to regain. Consider this. After years in the legal wilderness, Ripple now operates payment infrastructure in over 90 countries and handles $70 million in global volume. The dream of instant cross-border payments is becoming reality. Yet all of that progress could be jeopardized in a matter of hours, depending on how XRP fares at this critical threshold. As one prominent analyst put it, this is a textbook inflection point for price, for perception, and for the promise of what XRP and Ripple can actually deliver. And then there's the looming possibility of something even bigger, an XRP ETF. According to prediction markets, there's now a 77% chance the US will approve an XRP exchange-traded fund by December 2025. That would be a game changer, potentially opening the floodgates to billions in institutional capital. CoinDesk's AI model predicts XRP could hit $2.85 by June 1st, if the technicals and sentiment hold. But in crypto, if is always the longest word. The stakes? Higher than ever. Investors, financial institutions, and crypto watchers are all asking the same question. Will Ripple's token cement its status as digital cash for global payments, or will it stumble at the worst possible time? This brings us back to our number, 230. As traders edge toward the precipice, the sense of tension is palpable. The next move could mean a cascade of selling, a psychological blow, and perhaps months of hard-won progress erased. Or it could mean a sharp bounce, renewed faith, and a new surge of innovation for Ripple's network and for the broader dream of frictionless finance. So, as the XRP market teeters on this knife's edge, with whales exiting, retail interest surging, and traders debating feverishly, one burning question remains. Will XRP's 230 support hold, or is another dramatic twist in store? As XRP hovers around that crucial 230 support, the entire crypto market is holding its breath, and for good reason. The next few days and weeks could decide not just the direction of XRP's price, but potentially its entire short-term narrative as a digital asset. So, let's dig into what could happen next, and why these moments are so much more than just numbers on a chart. Imagine the first domino falling. XRP dips below $2.30. This isn't just a line on a graph breaking. For many traders, it triggers an automated sell-off. Stop losses, margin calls, and fear-driven selling start to snowball. The next key level below is $200, a price that served as a historical safety net for XRP during volatility earlier this year. If that support doesn't hold, we could see acceleration to the downside, at least in the short term. But let's not forget what's happening behind the scenes. Regulatory clouds that have hovered over Ripple and XRP for years are starting to clear. The SEC's decision to lower Ripple's fine to $50 million, effectively ending that long, painful legal saga, was nothing short of a thunderclap for the crypto space. For the first time in years, major U.S. institutions can look at XRP without fear of sudden regulatory whiplash. And with Paul Atkins taking the reins at the SEC, there's a tangible sense of a more crypto-friendly era dawning. This, by itself, could be the catalyst for a reversal. It's not just technicals that move markets. It's headlines, policy shifts, and, as we've seen just this month, geopolitics. The recent US-China tariff breakthrough, the lower-than-expected CPI inflation numbers, and even whispers of an XRP ETF approval, traders on Polymarket are putting the odds at 77% by end of the year, have already sent shockwaves through the price charts. So, what are the likely paths from here? Let's break down three main scenarios, each with very different consequences for holders, traders, and the future of Ripple itself. First, the bearish case. XRP fails to defend 230, slips under $2, and struggles to regain confidence. Whales continue to trim their positions, retail investors panic, and XRP's market cap is overtaken by rival altcoins making bigger headlines. If this happens, Ripple could face a tough climb to rebuild trust and momentum in the eyes of both investors and global banking partners. The narrative could quickly shift from one of regulatory triumph to one of missed opportunity, a stark reminder of just how quickly sentiment can change in the crypto Wild West. Second, the stabilization scenario. XRP wobbles around $2.30, perhaps briefly dipping below but quickly recovering as buy signals flash on the charts and opportunistic traders pile in. Remember, the TD sequential indicator recently flashed a buy signal right at this support, a sign that seasoned chart analysts are watching closely. Meanwhile, on-chain data shows a spike in wallets holding large amounts of XRP, between 10 million and 100 million tokens, with nearly 880 million XRP accumulated by whales just in the past month. This quiet accumulation hints at bigger players positioning for the next move. In this scenario, Ripple's new partnerships in the UAE, the expansion of Ripple payments into over 90 payout markets, and the refocused interest from institutions all serve as a tailwind. If the wider market remains constructive, especially with dovish signals from central banks and a cooling inflation rate in the US, XRP could break out of its funk, turning $2.30 from resistance into support and eyeing new highs by summer. CoinDesk's AI model expects $2.85 by June, and Standard Chartered's research desk is even more bullish, setting a target of $5.50 by the end of 2025 if ETFs and further adoption materialize. Finally, the bull run scenario. XRP defends $2.30, triggers cascading buy orders, and rides a wave of renewed hype as institutional money pours in. An XRP ETF gets the green light, capital floods into on-ramps in the US, and Ripple's payment corridors experience exponential growth, especially in Asia and the Middle East, thanks to partnerships with Dubai's Zand Bank, Mamo, and the newly acquired DFSA license. Media coverage intensifies, search trends spike, and FOMO, fear of missing out, returns in full force. In that case, $2.85 would just be the beginning, with analysts like Michael Van de Poppe predicting a possible retest of the $3.40 highs in the coming months. So, what's the catch? Nothing is ever set in stone. Crypto markets are uniquely sensitive to global headlines, regulatory surprises, and, let's be honest, the psychology of crowds. Remember the whale who recently trimmed their long position? That could be a purely technical hedge, or it could signal that even big players are wary of short-term volatility. But it's also true that, historically, the biggest breakouts happen when the majority of the market is either bored, distracted, or overly pessimistic. Now let's get practical. If you're watching XRP right now, what should you do? What lessons can savvy investors and curious newcomers take from this pivotal moment? First, mind your risk. Whether you're a trader or a long-term believer, nothing beats a well-defined plan. Support levels like $2.30 and $200 aren't magic numbers. They're signals for when to act. If XRP closes decisively below $2.30, be prepared for extra volatility. But if it rebounds with strong volume, that could be your cue to re-enter or double down. As Dr. Kirill Kretov from CoinPanel says, in crypto, surviving volatility is the name of the game. The market rewards those who plan for the worst but keep an eye on the best. Second, watch for the catalysts beyond the charts. Regulatory clarity is huge, and right now, XRP is closer than ever to institutional legitimacy in the US. The closing of the SEC case and the possibility of an ETF will shape the next wave of adoption. Don't just track price, track the headlines, the partnership press releases, the policy shifts. For example, the recent spike in South Korean trading volumes shows how global attitudes can change on a dime, bringing unexpected surges in price and liquidity. Third, think globally. Ripple's real-world partnerships, not just with UAE-based Zand Bank and Mamo, but with payment corridors in 90-plus countries, are the secret sauce that sets it apart from meme coins and hype-driven projects. These deals don't just generate headlines, they move real money across borders, and every new license, like the Dubai Financial Services Authority approval, chips away at old financial barriers. If you're a long-term investor, this utility should not be underestimated. Fourth, keep an eye on whale behavior. Big players often move before the herd, quietly accumulating or distributing XRP while retail sentiment remains flat. Use blockchain analytics to spot wallet flows. When large accounts accumulate, it's often a leading indicator for future price strength. And fifth, stay nimble and curious. The greatest opportunities often arise when fear and uncertainty dominate. Remember the data from Zoom? Google searches for XRP are surging again, a classic marker of renewed interest just as many traders have tuned out. As analyst Mr. X Zoom points out, breakouts occur when most are least interested in price action, or bored. As we bring it all together, what's the answer to our burning question? Can XRP bounce back, or is a deeper crisis looming? The truth is, both danger and opportunity are at their highest at inflection points like this. The 230 level is more than just a technical checkpoint. It's a psychological battlefield where bulls, bears, and institutional giants are all staking their claims. If XRP can hold this ground, the recent regulatory victories could prove to be a launchpad, sending ripples, no pun intended, through the entire digital asset market. The stars are aligning: regulatory clarity, strong global partnerships, surging trading activity, renewed retail interest, and even the outside chance of an ETF approval. But if 230 gives way, don't expect an immediate collapse to doom. Instead, look for smart money to quietly accumulate at lower levels, setting the stage for a possible summer rebound. In crypto, fortunes are made not when everything is clear, but when uncertainty is at its peak. Here's the secret most outsiders miss. Behind XRP's price swings is not just trader emotion or hype, but a vast growing network of real-world usage. With over $70 million in volume processed globally and new regions coming online every month, Ripple is quietly constructing the infrastructure of tomorrow's financial system. The headlines may focus on day-to-day volatility, but the foundation is being laid block by block, deal by deal. So what should you do? Stay informed, stay flexible, and make decisions grounded in both data and vision. Don't let fear or FOMO control your moves. Set your strategy now for the inevitable twists and turns ahead. If you found this breakdown helpful, hit like, subscribe, and let us know in the comments. Are you bullish or bearish on XRP's future? And if you want a deeper dive into on-chain analytics and whale tracking tools, drop a comment. We just might make it our next episode. Because in this market, knowledge is power, and the race isn't always to the fastest or the loudest, but to those who see the bigger picture before everyone else. Don't blink. The next chapter for XRP is about to begin.